Hello, traders. Thanks for waiting. We're a couple minutes delayed. Technical issues that we've got worked out. It is Wednesday, Fed Day, July 31st. Lots of exciting price action. Harry, how are you doing today?
I'm great. I love Fed Day. Fed Day is always fun.
Oh, yeah. Harry did a really awesome strangle yesterday. He was looking for some overnight volatility given earnings and FOMC. So I'll let him talk a little bit about that. As always, we start these events with a review of our previous picks. So I'm going to go through a few of my recent picks so you can see how they fared. And then we're going to put it over to Harry and he'll show us what he's got on. And Ulta was my short from the last live event a week ago Wednesday, and you can see how the stock is compressing on its low. Really hasn't done anything one way or the other to speak of. I still like the short. The fact that it hasn't been able to bounce on a day like today with the S&P up dramatically tells me that there is still some selling pressure in it. Over the weekend, I had a bearish pick, COST, that actually had performed. You can see how the stock had moved lower during the course of the week. And there was the Sunday video came out here. So we had a nice little drop yesterday. Obviously, big bounce today along with everything. D1 chart. I still like Costco on the short side. You can see how, yes, it is bouncing a little bit, but not very much, and that downward trend line is still intact. So I'd be watching for it to continue to show some relative weakness. So I still like that short. I highlighted a couple of longs also during that last video. RTX was one of them. Really like RTX. You can see on the M15 chart. Video came out in here. You can see how the stock has continued to move higher. Yesterday was a great tell. Look at that stock power higher, even with the market selling off hard. I'll put that SPY overlay up so that you can see that. So stock is grinding higher. Market down big. Oh, great. I just lost my platform, but that's okay. So LMT was the other long that I had. I'll bring that chart up, but what we'll do is we will have Harry talk about his short pick from last week, which was awesome.
Yeah, once again, I made you degenerate bastards some money if you followed my advice and shorted Qualcomm. When I suggested you short Qualcomm, it was, let's see, last Wednesday, it was at a roughly 186. It's now at 175. I mean, any day that you chose, you could have closed it that later on that day as a day trade. You could close it the next day. You could have waited until Monday, Tuesday, any day you wanted, you would have made money. In fact, if you closed it yesterday, you would have made roughly, I don't know, around $15 on that short. So $15 on a short for a stock like Qualcomm is almost 10%, 10% of the entire stock. You really can't get a better pick than that. So Qualcomm was my pick. I don't yet have my pick for this week. I'm looking at a couple of names that I like, but with the Fed coming up and a lot of earnings coming up, the picks, we obviously we make our picks based on the technicals, and as you see on Pete's chart there, from Option Stalker with Qualcomm, you'll see when I took the pick, it broke down through the SMA 100, right? So you see this sort of SMA 100 break, and it broke down convincingly, and it was closing, starts closing towards the low of the day. That's a confirmation of that SMA break when you get not only some distance between the price and the support that it broke, but also you start seeing a close towards the low of the day. That gives you a very good indication of basically that break was confirmed. And then it just continued down from there on decent volume. 3 of the last 6 days have been above average volume. So this was my pick, but keep in mind that these are based on, obviously, like I said, the technicals of the daily chart, of the intraday chart, of the relative weakness and strength of the SPY. However, when we're picking stocks now, we have to take into account there's a lot of earnings coming up, not just tech earnings, but a lot of earnings coming up. And while we don't pick stocks that are going to have earnings, a lot of them will be earnings adjacent. So, for example, tonight, ARM is reporting, Meta is reporting, Qualcomm is reporting. And if I were to pick, let's say, a stock like Nvidia, which is strong today, but still between two SMAs, I'd have to keep in mind that the report from ARM certainly will impact the price of Nvidia. So a lot of the picks you make, you do have to check to see what stocks are going to be reporting earnings and how that will and how it has historically impacted the stock you're picking's price.
NVIDIA, look at that nice price action. Steady grind higher today. You can see that the market kind of put in a little bit of a double top. For those of you who are watching the live event for the first time, I will have a chart of the S&P 500, the SPY running in the background, and I'll try and keep it on the 5 minutes so that we can see what the market is doing at all times. This is something you absolutely should do at all times. You have to know what the market is doing. But you can see how the market has tried to get through that resistance level a second time now, and NVIDIA keeps grinding higher. So for today, it has really nice strength. I'm going to give you my bearish pick because I had it before we came on. I actually bought some puts on Merck, and I am going to hold this trade through the FOMC statement. And my rationale for that is that the stock is extremely weak on a D1 basis. You can see all the trend line breaches right here. These are all low plus trend lines, even some low minuses. A breach below the 200-day moving average, long red candle. I'm going to take the 10TL now off so that you can see that more clearly. Look at that breakdown. And we're getting follow through today on a day when what? The market is up. Huge. Stock can't find a bid. Sellers in there pounding it. Wham, 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 even with the market going up. So FOMC, yes, we want to keep our risk exposure fairly light because it's a binary event. We don't know how the market's going to react to that news. For me personally, I'm not that worried about it because if the stock can't rally when the S&P is up 80 points, if the market rallies after the FOMC, it might get a little temporary blip higher. But this type of price action tells me that there are some longer term shareholders who are trying to get out of Merck. So if I get a negative reaction to the FOMC, whoosh, I'm expecting the stock to move lower. So that is my bearish pick of the day.
I
Harry,
like
you want to talk a little?
Merck's yesterday's price action. That was the drop of roughly 11%, the largest intraday drop for Merck since March of 2020. And that's stemming from they're cutting their full year profit forecast in their second quarter sales, particularly of their HPV vaccine. And they're highlighting that their weaker sales in China specifically is the reason for their cut in their forecast. So they also narrowed their guidance for annual revenue overall. So when you get that level of fundamental change to the company's bottom line, and particularly when it's dealing with the forecast moving forward, you get that huge drop. And as you see, as Pete's noting today, it's just continuing down, right? Filling the gap certainly from way back in January. So I think it's a pretty good pick right there. Broke all of its SMAs.
Always good to check the news when you have a big drop like that. You want to find out if there is something material going on in the company. Obviously, a lowered guidance is going to weigh on that stock longer term. I am writing an article on how to day trade earnings. I did one on how to swing trade earnings, and I'm doing one on how to day trade earnings. I hope to have that out in the next day or two. But these large, big moves down where the underlying absolutely blows through major support levels, just obliterates that support. not poke, 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 obliterates it, those are the ones you want to go in and take a closer look at, because there's a good likelihood that that move that started earlier in the day is going to continue.
Earnings are always a odd beast, as we all know. A lot of people say, "Oh, it great earnings. Why did it drop?" There's one. A lot of people underestimate the importance of guidance, right? So guidance is hugely important when it comes to a reaction to earnings, where institutions don't buy for today's price; they buy for the price they believe it will be a year from now or 2 years from now. And so that's why guidance plays such a large role. Secondly, a lot is always baked into the stock. So even though it meets expectations, expectations really is the wrong word. When deep down, what they're looking for is to exceed expectations, particularly if the stock had a strong run up going into that earnings. They're kind of banking on good earnings, and then it just hits expectations, and then that run up has already been priced in, and then you get a drop. Microsoft yesterday is a whiplash example of earnings that really were fine. The earnings were actually better than fine. They were good, except you had an expectation of a 30% growth in the cloud computing, AI cloud computing, and it was 29%. So you had a 1% difference. Clearly, once their forecast came out, sanity started returning. But there you have sort of this overblown reaction. But there are, as I'm sure Pete will go into in his article, very clear signs once you see a stock has stopped the emotional roller coaster and settled into what you can start to switch back and rely back on technicals again.
Bring up LMT very quickly, and that. Whoops, sorry, I'm trying to operate in the dark here. I didn't charge my keyboard, so it's not backlit and I can't see what the letters are on it. So when I'm trying to bring up a chart, I'm kind of hunting and pecking. LMT was the other long that I highlighted last Sunday, and you can see that beautiful breakout from that compression, and then the follow through, that really big follow through right there. So we didn't just peck, peck, peck at that horizontal resistance. We blew through it. And the stock has been strong relative to what the market's been doing. You can see market has been selling off recently. Longer term buyers of LMT, they don't care about the market right now. They are wanting to own this stock.
A lot of people also don't know, and I've been singing this for a while and talking about LMT as if you are a long-term investor, it's a stock I would pick. LMT obviously is known for its military hardware and government contracts, and war is always good for LMT. But what a lot of people don't know is LMT is one of the primary producers in the world of quantum computing. And as we all know, as AI begins to advance and AI models begin to advance, quantum computing is going to eventually take a major role in that advancement. So when you have, right now, microchips are, the semiconductors and so on, NVIDIAs of the world are the key to AI advancement. But soon, quantum computing is going to be front and center. And when that happens, LMT is one of the largest producers of those. So, that might be a year from now, 2 years from now. But if you're talking about a long-term investment, put it away, tuck it away, buy it for your kids, and when they graduate college, they can get it. That's a stock that's probably a safe pick.
Couple of features I'm going to show you. These will be in the new release, new version we've got coming up in a couple of weeks. I just added LMT to the background here. You can see that the ticker is highlighted, and also you'll see some blue and yellow arrows. Those will actually be green, red, and blue in the future, indicating entry and exit. Those are our trade signals. Right now we just have them as entry or buy and sell. So when you see the arrows, you can kind of see, as we're flipping through charts, where they would have signaled an entry and an exit. I think you're really going to like them.
They are fantastic. Look, I am probably one of the biggest skeptics out there when it comes to new trade signals and new indicators. And I like to see, show it to me work over hundreds and hundreds of trades and so on. But I've been playing around with these buy and sell signals, and they are, I mean, they're pretty spot on. They are really good. So I've been using them, particularly if you're day trading, putting them on and then, buying when you get that buy signal and selling when you get the sell signal. They're pretty easy to understand. They're pretty straightforward. So, they're another tool in your toolkit. And some people might rely on them solely, and some people might say, okay, it's another check in the checkbox. Either way, as I'm exploring these, they're really good. So great job there
You got
developing those.
Thank you. It's been a decade uh, in the making, so it's not anything that I've ever sit back and stop working on. I'm always trying to refine it and perfect it, but this iteration it's very special. Yesterday, you did a call purchase on Apple, and I went back and I looked, and I'm like, man, it lined up pretty close to that buy signal. So I'm wondering if Harry took that into consideration at all. That was a nice entry on a 5-minute
Yeah,
chart.
no, I did. And then, I took profit in on that and got out. Um, and I mean, right now, I am, my positions right now, I mean, I'm long SMCI, which has had a nice bump today, $36 up. Um, I'm currently long Amazon. That is a separate play. That's an earnings play. Amazon is JPM's #1 pick of the year going into earnings. Not saying that they're always right. They're not always right, but they certainly are giving an edge on that one. So I'm taking that. I have a slight hedge on a now short that I had prior to earnings. I still have like 1,000 shares of that on, and I still have half of my QRBO earnings trade on as well. But Amazon right now, Amazon's up around $5 on 250 contracts, so doing well on that. And SMCI, happy it broke back above 700. Neither of those are going to be my pick of the day, but that's just the positions that I currently have.
I did notice a nice little long that I like for day trading. CMG looked good earlier today. Let's see what it's doing now. If it has dipped a little bit, it got above the 200-day moving average. I would only do this for a day trade. McDonald's has also been bouncing, so there's been a lot of weakness in the restaurant sector. McDonald's came out with better than expected results, better than feared results, and Chipotle did as well. So you can see nice little price action to the upside. It's been able to hold those gains. So I wouldn't do anything before the Fed right now. I would just be sitting on the sidelines waiting, and I wouldn't be taking any kind of swing positions in Chipotle or any other stock right now. Let's get into a little market analysis, Harry. My opinion has been that we're going through what I deem to be an important window. There's a lot of information coming through right now. We had this little bit of a pullback. We were looking for a dip. We could tell that this last leg of the rally took place on light volume, compressed tiny little candles. We're bumping up against a longer term high minus trend line. And so, yes, the market did back off. We got the dip that we were expecting. And so now we've got volatility. We've seen it every single day. Buyers and sellers are paired off. You got people thinking, oh, this is a time to lighten up risk, sell, 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 sell. You've also got looking at this strong, strong long-term uptrend. Buy the dip, buy the dip, buy the dip. So we're expecting a little dip in here, and I'm expecting a little bit of a bounce. What happens right here, right now, with the FOMC and earnings and all the economic releases is going to determine where we go. I think we're going to need a few days to figure that out, let the dust settle. I'm thinking first week in August, we start getting our bearings. Well, then we'll know, is this going to be a lower high, double top, and then we roll over? If yes, that's going to set us up with some nice shorts in August. If, on the other hand, earnings season comes out, good Fed reaction, and we have no problem testing this high, long green candle, green candle, right back to it. It's going to be a sign that buyers are still in control. We need to favor the long side. Personally, I'm going to have a hard time getting long here with the market having run up so far. And I don't like these little light volume drifts higher because the rug can get pulled out instantly. I'd be much more interested in trading from the short side during a seasonally bearish time of year. Harry, what's kind of your perspective on what's going on in the market right now?
I mean, look, if I look at it, it's hard, right? Because, if I look at it purely on a technical basis, I'm looking at SPY bouncing off the 50 SMA around 5 times in the last week. And then now today it's clearing and going into the gap. That gap was created on 7/24 when it dropped down it dropped down from 556 and then it drops all the way down to 540. 556 from the high of the previous day. And so you have this gap here, and now you have SPY entering that gap. So you look at that and you say, okay, I have a pretty bullish technical setup. I got a nice bounce off the 50. I have an entering of the gap. I have a gap up today, and then it just continues to drift upwards. And I have decent volume. I'm not looking at a low volume market at the moment. So, okay, I have all that. Great. But then I'm looking and saying, okay, I have 5 or 6 market moving events coming up. I have the FOMC right now in about 2 hours, an hour and a half. We're going to have the FOMC, and while there's not much expectation of a rate cut today, there's about 100% expectation of a rate cut in September. And there's going to be a lot of emphasis on how Powell comes across. And is he, right now they are pricing in around 2 rate cuts for the rest of the year. But is his language going to be, hey, we're more convinced now and we're not as, going data point to data point, or that we still need a lot more evidence, which tells the market, hey, one bad CPI print, one bad one good or jobs report, and they may back off that September cut. That could have a huge impact. So you have a lot of expectation priced into this 550 SPY right now, which is the expectation that Powell's going to come out there and be as dovish as they hope he can be. Then on top of that, even if you did not have the Fed, even if you did not have any of that, you are looking at one of the more active 2 days in a row, or 3 from count yesterday, of earnings. And earnings haven't exactly blown the doors off. On some it has, AMD now, but Microsoft hasn't. And so tonight you have Meta, you have ARM, you have Qualcomm, you have some of the minor ones. You have eBay and Etsy and Carvana and Riot and so on. And then tomorrow, you're looking at Apple and you're looking at Amazon. And why is that important, other than the fact that it's Apple and Amazon? But those stocks, those companies are so big. They take up a large chunk of SPY and, Dow and NASDAQ, of those ETFs are taken up by a large piece of those companies. So just the very price movement in those companies, forget about the echo effect and all that, is going to be enough to impact the market. So you have all these major earnings. You have the FOMC. So if I was to remove myself, I'd say, okay, it's bullish. But with all of that taken into account, what I'm mainly looking at is the possibility of doing another, before the FOMC, another SPY strangle, this time expiring August 2nd, and maybe getting the 553 calls and then getting the 547 puts. You do that for like $5, and seeing where that goes, because that is what I love about strangles, which is what I did yesterday, is you got this huge market drop and I was able to close my puts for enough profit that it covered the entire strangle, which means whatever I then get on calls, that's my profit, right? And so this morning we get this gigantic gap up, and I was able to sell those calls for like $4. So, I mean around $4, $4.15 in profit on the entire strangle. 10 contracts, that's $4,000 in the challenge account. what I'm looking for here is you get one reaction from the CPI, you take profit there, maybe get a different reaction from the earnings, and then take profit on the other side. With strangles, you always want to set it up where if you can take one half of that strangle and cover your entire cost of the strangle so that the other half is pure profit, that's where you want to be. And so I think there's a chance of that happening with so many market moving events. So I'm kind of on, nothing says on the fence like a strangle. So that's where I am.
Well, and that was a brilliant play because your underlying thesis for that is volatility. Buyers
Yes.
and sellers are paired off. And so you put that, actually, you put that strangle on pretty close to where we had a sell signal in here, but
Yep.
you get this big drop right in here. And then you take it off, you've got a free trade. And the notion being that, hey, what goes up must go down in these markets. We got, the market all over the place. Every single day, we're getting these huge moves and then contra moves. So, yeah, what are the chances? It doesn't risk, you have no risk in the trade. What are the chances that we might spring back overnight? Maybe tech stocks have been sold off a little bit too hard. I think that was certainly the case in AMD, a lot of bad news priced into it. And so it gets this big release, maybe some short covering in it. But you got your move this morning and you took profits early. It's just gorgeous setup, beautiful execution of the trade too. So yeah, love to see how you do on this one.
Yeah, I'm definitely looking at that one. So now I'm just trying to see. I like your pick, so I'm trying to get a good pick myself. Obviously a crowd short, but that one might be a little extended at the moment. So I'm not
Couple more
favoring
things.
either side. I'm just looking for maybe something that is, showing some decent relative strength that may not be as impacted by all of the insanity that's about to hit the market. So I'm trying to find the right sweet spot here.
And while you're looking, I will mention that VIX, you can see how VIX has started to move off of its low right here, and it's still staying up. Obviously, there's a lot of uncertainty. With all the news coming out, option premiums are going to be fairly elevated because the market could make big swings either way. So we've got this little rise in VIX. If we're looking at the market possibly breaking down and making a double top lower high, then perhaps next week we start to see the VIX keep this current level and stay elevated. That would be a sign that institutions are buying VIX futures or buying calls on VIX to hedge themselves to get some protection. And so we've got a couple scenarios. It could be a normal dip like this, just like the one we saw back in here in April, or perhaps this starts to manifest into something more like we saw exactly this time of year last year, where you get the initial pullback, you get the bounce, and now if you're drawing longer term upward sloping trend lines, they come into play around here, they're breached in here, you get your double top lower high. The point to all of this is you're going to hear people say, I think the market has made a double top lower high, I'm buying puts, or I think the market is bearish, or you have other people saying, no, we're going to go make a new all-time high. They don't know. Nobody knows right now. Buyers and sellers are paired off. We have to wait for technical confirmation. So we're not in there guessing what the market's going to do. We're going to be trading based on what we see, and we're waiting for one of these two scenarios to play out, either that double top and a breakdown below an upward sloping trend line. Great, we can be bearish in August and September and expect follow-through selling like this. Or, hey, it was a normal little dip. Earnings season is through. The economy is good. They want them. They want to buy them. Look, we're going to keep grinding higher and higher. So let's wait and see which scenario plays out. We'll know next week.
Its stock looks really good to me, which I hate because I hate this stock long. I hate the company, which is hypocritical of me considering I own two of the cars. But Tesla looks like a good long here. You got, you know, it's above the SMAs. I have it bouncing way above a nice trend line here from June 11th. It tries to hit that trend line 4 different times and cannot seem to get through that level of support. It is bouncing back up. It's already in the gap that was created on 724. 225.99 was the entry into that gap, and it blew past that. I mean, if I'm looking at it and I just say, all right, I'm not gonna look at the name of the damn company, just looking at the pure chart here, Tesla looks like a good long.
I thought you were going to give me Domino's pizza or something because you said you hate the company and you hate their product.
Yeah, I did. Well, look, I have Teslas, so I like the product. I just hate the company and hate the CEO, but I do like the product. So, but like I said, if I erase the name, yeah, Tesla is probably a good long here. You see anything on that chart that
I like it. I like it too. So a couple things that you can do here is I just set an alert GTC on the high from today. And I will also set another alert using the wick of this candle. And I could use the wick of that candle right there, or I could use this wick right here. And now you can see I'll be alerted if either of these two price levels have been breached. But yes, it pulled back after a nice run higher, got a little frothy in here. This tells you that there is some excitement in this stock. Look at these stacked green candles in here. Some of that was short covering. So now the stock has had a chance to pull back, digest the news that was out there. It's been able to hold these gains. So yeah, if it can start climbing back above these resistance levels, I like it.
yeah, God, I hate going along that damn company. But all right, but that might be my pick. I might grin it and bear it and just pick the Tesla long here. I'm desperately trying to find a better one though.
We'll keep looking. We'll see what else we got that could be setting up.
Here. Humana on their earnings this morning got smacked pretty hard, falling below its 50 SMA, dropping 9%. That was that's a pretty big beat down for that company. And let's see here. What I am surprised with a little bit is, and I do see some strength in companies like Snow today and in Palo Alto, but I am surprised with the epic fuck up that crowd had, that we do not see their competitors benefiting as much. Now, I'm not saying they haven't gone up, they have, but you would think that with the level of just selling, that you would see a better pop on their competitors, and we don't see that.
I think that Palo Alto had some issues of their own, and I think it had to do with their entire security model was being called into question. But yeah, they haven't done much of anything. But that crowd, you'd mentioned it earlier, that was, gosh, man, that has been such a nice short. I know we were all over it in the chat room yesterday. I'll just talk a little bit about this move right here on an M5 basis. When you get a big drop like this and you get follow through selling, you can expect that there's going to be a bounce in here somewhere after a huge move like that. So shorting the low of the day, you have to be very, very careful. You take a small starter position. Only when you have confirmation that the stock is continuing to deteriorate and that there's more selling to come can you really add to the position. So you've got to be more cautious on these types of plays, because often you'll get a couple of long red candles, and you have to be much more careful when there are only a couple of long candles. I'll tell you this time and time again, what we would prefer to see is lots of them, just like this started to unfold. Now you can be certain that every time the stock tries to rally, it's just being pounded down. When you only get one or two long candles, those are easily erased. So now you can see that follow through selling in here. This is when and it can't get above VWAP. So now you can enter that short with greater confidence. Plus, you had that going on in the market. So word of caution, when you get a big move down and it's only a couple of long candles, you don't want to short those lows of the day. You must have a bounce, and you should expect that there's going to be a bounce.
Someone asked what I think of PCT. It's funny. Stocks like these, you can suffer from what I call like the Hugo Reyes effect. Hugo Reyes, the guy who won the lottery on Lost. You get one rich fuck who comes in and says, you know what, I'm gonna short 100,000 shares of these or buy 1,000 puts. Hell, I could short 100,000 shares of these. And you look at the volume on this stock, and it's a $7 stock, and you're looking at hardly any volume on the 5-minute candles. Any individual can come in here and just dramatically impact the price of this stock. So, the stock is, particularly when you have a stock like this, it's up 40% in the last month. You don't know if someone out there is holding 500,000 shares and going, all right, I made my profit, I'm out, and they sell. Now, if they sold that position, they'd have to stagger it. But if they sold that position, the stock's going to take a nosedive. So I don't trust stocks like these. There's not enough liquidity. There's not enough backing it up. Sure, the technicals look good. It's just one of those, you're really risking that one person. Normally, retail cannot impact the stock, and you want a stock that retail cannot impact because you cannot trust retail. You want stocks that only institutions can impact, so then you could see when institutions are in there. This is a stock that retail can impact. I would stay away from it. On the other hand, someone mentioned IBM, and IBM was mentioned in the chat room too. IBM, there's a lot to like about IBM. You just have to be careful because, one, you do have a, from April 26th, you can draw that upward sloping trend line, right? So you connect April 26th to the 29th, connect it again to the May 21st, May 22nd, May 23rd, July 25th, briefly goes through it back down. July 26th, you got tons of touches on this, and that is going to come in right around 195.07. So call it 195, right? Actually, even maybe 194.70. So you got $1 before it hits there. You also have it in a bit of compression here. So you have this compression that started on July 25th, and it's still compressing now. You need a break of that compression, and the way to break that compression is to see a break of that trend line. So you set an alert on that trend line, and you wait, and if it breaks the trend line and it confirms above it, now you have a decent long, and you go for it. If it doesn't, then you know that you would have been stuck in that stock. So that's how I would play it. It's not a bad idea, IBM. I see where you're going with it. Just be careful. You do have that trend line. You do have that compression. You want to see the break of it before you go in. It's not one of those that you're going to miss out on. If it breaks it, it's just going to keep going. It'll be fine.
Let's see. I had, can I review CVS set up as a good short a few weeks ago? A few weeks ago, you were tuning in. A few weeks ago, I had mentioned to you that you want to keep your trades very short term. Okay. So the market's moving like crazy. CVS has had a nice bounce. At the time that we highlighted the stock, we did have some further follow through on the downside. So yeah, now CVS actually is starting to get into this gap right in here. You can see there's horizontal resistance there. It tried to poke through, get through the 100-day moving average, and it was smacked down a little bit here. So it's still trying to get through this horizontal resistance. You have an upward sloping trend line right now. So there is some support. We are making higher lows. So what would I do with this information? I would click GTC and I would click on the top of that candle right there, which coincides with the 100-day moving average. If it can close above it, it's going to start filling in that gap, and it's got room to go to the 200-day moving average. So that's how I would play it.
Okay. All right, let's see. I really am trying to find something other than Tesla. Oh, God. Anything. Seriously. Give me anything.
I think, let's see, I think I had FSLY just looked like an interesting chart. This has been a stock that has been pounded, and now the stock is finally starting to form support. It's not anything that I would trade right now, but when you run across stocks like this, you need to set alerts. Click GTC, click, click. Look at that. See how easy that was? I'm on to the next chart. But I can tell you that if the stock comes up and gets through this horizontal resistance level, it's a good chance it's going to get to the 100-day moving average. I'm interested in it. So just take the time to set these alerts. Let's see if we can do maybe a custom search. I'm going to be looking for a stock for you too. SAVA, I mean, this is a wild stock. This thing moves, and you can see it in here. It's had a very strong day today, and it announces earnings tomorrow. So earnings, actually, those earnings are tomorrow and before the open, but we'll take a look at that M5. And I saw it earlier today when it was creeping through this resistance level and getting through the prior day's high. It has excellent volume. It's pre-earnings. This looked really good because the market was pulling back and the stock continued to try and move higher. And it's been a nice little 70-cent move on a $20 stock. So those are the patterns you want to be looking for.
I'd put an alert on that at, you have the SMA 200 on Sava at $20.88 coming right up to it. I'd put a $21 alert on that. And you also have a lot of horizontal there at 21, right around that area. So put a nice alert on Sava. And see here, someone asked about Meta. Meta's earnings tonight. I can tell you JPM is not very high on Meta. They're looking for slower growth, higher cost, and a continuation. Meta recovered from its last earnings, but they're not very bullish on that. And then what causes to buy a stock from a good earnings reaction, but then suddenly the next day sell off on high relative volume, like AMD? So what you're basically asking is, what happened? Why institutions rushed in? They bought AMD after earnings, and now it's clear that there's some selling going on in there. Well, first off, there's a difference between the algo trading and the non-algo trading. So you'll notice when earnings come out, there's an immediate reaction in the stock, right? Immediate reaction. No human beings reacting that fast and reading through those earnings. So that is an algorithm. So you have this sort of immediate kind of reaction where an algo is trained to look for specific numbers in that, whether it's the capex spend, whether it's the the EBITDA, the EPS, whatever it is. Certain stocks that have different concentrations on different aspects of their earnings, particularly when you're talking about tech stocks. After that algo reaction, and you have a chance for analysts to digest it, particularly overnight, what you start getting is their models will reassess the new price points on the stock, reassess and go through the transcript of the phone call. So then you sort of get this sort of non-algo digestion of the earnings. And what we're getting here is, and technicals come into that as well, particularly if institutions think that there's a little bit of jump the gun, and you see on AMD you have this SMA of 200, and what investors and institutions are seeing is that buying went right up to that SMA but did not go through it, and that tells them that, all right, we're not breaking through this level of resistance. I can probably get this stock cheaper, so I'm going to take profit right now that I got from the earnings reaction, wait for the stock to drop to a cheaper price, and then probably buy it up again. The question is that what price will they buy it? How far will they let it drop? My guess is that a stock like this with earnings like that, you're going to get another attempt at that SMA pretty soon. When? I mean, could be today, it could be in a week, but you will get it. And then when that happens, if it breaks through, then you'll see the real kind of reaction to it. And
all right, here you.
Yeah, sorry, Pete.
I've run a search here. I might have a couple picks for you, but I want to show everybody how I found it. So trying to find a decent stock here. We're looking for a good long. So we want to have real relative strength versus the market. On a swing basis, I selected H1 and D1. I'm using our new 1OP signal, bullish, H1, D1. Okay. I want good option liquidity, so I have a rating of -2 to 15. And prior earnings I have marked. So here's my thinking. The prior earnings were a day ago to 30 days ago. We've had a lot of companies announce earnings, okay? I don't want to be mulling around with all the earnings announcements coming out over the course of the next 2 or 3 weeks. So a lot of searches are going to be littered with companies where I can take a position, but then I've got to be mindful and exiting and adjusting. And I don't want to deal with that. I'm looking for something I can sink my teeth into because we want to give you a trade that might last for the course of the next week. So these are the stocks that came up in that list. I'm going to knock through a couple of them, but I found one, HWM. Why don't you take a look at that one? And that's actually one that Will showed me earlier today. He goes, "What do you think of this one?" I'm like, I love it. May not have liquid options, but I don't care. Just buy the damn shares. You can see.
I'm looking at that. I like that. Nice. From a low on July 25th, a nice steady incline, and today another gap up, and it's breaking through its 50 and 100 SMAs. So you have decent liquidity here. You have a nice stretch back up to 11, which was its high back on 716. Cheap stock. Yeah, this is a pretty good one here to just buy some shares, probably grab another, grab $1 off of it.
So you might have the wrong symbol. You might have the wrong symbol. Look at, it's H like Harry, W.
I'm looking at HMY, which is actually a pretty good one, HMY, but HMW.
No, it's HWM.
HWM. Looking at it now, $96.31.
You got it. That's the one. That's the one. Look at that M5.
Clearly, I think it must have had, did it have earnings? Must have,
yeah,
right?
Had earnings. Yeah, earnings yesterday.
Yeah.
Before the open.
Let me take a look here. All right. I'll take a look here. Overweight, price target. A lot of price target raises on that. Price target raise. Okay. Pretty good earnings overall.
You're looking at it. I'm going to click through these symbols so you'll see the chart changing. These are some of the other stocks that came up. I'm just going to go on the daily chart while Harry's doing his analysis.
Yeah, I like that one. It's tied into Boeing a little bit. That's probably the only thing I don't like about it.
ABBV is in that list. That's breaking out to a new high. I know you're not a huge fan of that one either.
Yeah, it's on my no trade list.
We've all got them.
Yeah.
AVTR had a nice breakout, but that's been a huge move. So this one, you want to see it settle down for a little while, make sure that it holds that breakout. But if it can hold that breakout, that's a big enough move.
Take a look at Caterpillar.
That's on my don't trade list.
Really?
That one, oh my gosh. I mean, that thing is all over the place. Seems like as soon as it gets going, like this last little breakout that we had, and then it just gets yanked right back. When it goes, it does have some nice moves like it did back till March of this year. That's a nice steady move you can get behind. But right now, this action in here has been very choppy.
By the way, FCW 218, we do not trade penny stocks. You just suggested IFUS. That's a penny stock. It's a 9-cent stock. We don't trade those. But good luck if you do. You're not going to make money. But good luck anyway. I'll say good luck, even though I know you won't make money. While you're looking at those, why do you not trade futures, only equity? I do trade futures. So does Pete. I don't announce future trades because when I used to do that, I think I had a streak once where I had 120 points in a row or something. And but everyone tends to follow them, and I don't want you all to trade futures. That's why I don't want you trading futures. You will lose your money unless you have already become a profitable trader. You're consistently profitable. You know how to trade equities. You know how to do relative strength, relative weakness, month after month. You're collecting profit and all that. And then you want to try trading futures, go right ahead. But unless you are at that point, no. Do not try to throw an off-speed pitch when you're still in junior high. Just stick with a fastball. So I'm not going to encourage you all to trade futures because you're losing money trading futures, and I am not going to be a part of that massacre, which will occur. Trust me, it will occur. You can claim all you want otherwise. You are going to get your ass handed to you if you try trading futures. So I stay away from them in terms of publicly. But yeah, I trade them. I'm just not going to post the trades on futures.
And you have to be very, very patient. And there are most of the time you don't even want to do a futures trade. And yes, there are probably 2 setups a day that I feel that I could take with a high degree of confidence. There's some days where you get a trend day like yesterday. All right, I can really sink my teeth into that, take a position and let it run and perhaps even add to it. But most days this week, if you're trying to make sense out of the price action that we saw back in here and you're trading futures, you're going to get your ass handed to you. I mean, this is just complete nonsense. And you get caught on the wrong side of one of those trades, it's mentally very, very difficult to right that ship because you're thinking about, oh my God, I just lost 2 weeks worth of profitability on that one move. And even though I feel like the next trade's going to be a good one, I can't take it. I can't stomach this type of volatility and this type of move. So it's for seasoned traders and pros. And there's a huge edge to trading stock. That's what we teach.
I'm going to run. I've got so many symbols here. People are popping up, and I'm going to run through a couple of them real fast. NEE, Next Era Energy, doesn't have earnings until October 22nd. I like it. I like the break above the 50 SMA after several attempts. It looks like today's break with the gap up is legitimate and confirmed. So I would keep on with NEE. It's a decent bullish play. You're not going to make a lot off this thing, but that's one where you buy in the money call options, so you 2 weeks out, something like that, and it's a pretty safe. It's a pretty safe play. So NEE, I like that play. It looks good. And then I have Shop earning. Some people are asking about Shop. Yes, Shop right now, if you look at the daily chart, is bearish. There's no reason to go in Shop right now. Earnings are next week. Yes, there's a lot of anticipation that Shop will go up on earnings because it's been beaten up. But again, you should not be playing earnings, just like you should not be playing futures unless you're going to gamble. In which case, just go to Vegas. You'll have a much better time. But Spotify, obviously Spotify already had earnings. Spotify is very bullish, but it is in compression, has been in compression since the gap up on July 21st. I would wait until you see a very clean break of that at around 346, and then you might have a clear shot all the way up towards 375. So Spotify, wait for a break of compression and put yourself an alert. Pfizer just had earnings. Earnings were decent, but now today it is backed off a bit. Plus, you have Moderna reporting tomorrow morning. I would stay away from Pfizer right now. It has a very muted reaction. It's already up quite a bit from ever since it broke the SMA 200. That's when you would have gone in. Plus, with Moderna going, I would not take that. VFC, you have looking really good. However, you have earnings next week. You had quite a hell of a run up here. It's a $17 stock. I would only day trade it, but I would day trade it from the bullish side. And then finally, FDX right now, Huge jump up from earnings back in June, one of the last ones to report there. It has held that gap up. It is above the EMA 15, above all the SMAs. FDX is an excellent bullish pick right now. Doesn't have earnings again into September. Yeah, we just watched the kind of muted volume on this stock, but that is also an excellent bullish pick. And there we go. It just ran through like 6 stocks. Woo.
Nicely done. That's you're like Kramer on Lightning Round, except 10 times.
Except
better.
I'm right.
That's right. Let's see what questions I can see here. JPM, okay, that was a question on their private client and on their analysis. MMM, great reaction, big breakout. I know that from last week. So let's take a look at that. So you want to make sure, and it looks pretty good, that it's going to be able to hold this breakout. So what I would be doing is, yeah, I would be waiting for the FOMC. If the stock were going to sell off, yesterday was the key. You see this nice bullish hammer right here from yesterday? That to me is a fantastic tell that there are buyers in this stock, because if there weren't, this would have retraced dramatically and you would have seen some profit taking in it. But the fact that it didn't drop in a big market sell-off like that tells me that, yep, this stock has a much higher likelihood of going higher than lower.
Some people are asking about the challenge account. It's up around 25%. It got its ass kicked by Boeing. I was told to run this challenge account very slowly, run it as if it were just, a typical day swing trading account, not go for the quick doubling of it, which you can't do consistently. I still plan on doubling this account. In fact, after Boeing kicked its ass, I came back, and with that Tesla short recovery, and then with the SPY strangle, recovered everything I'd lost from Boeing there, and the account's up around 25% right now. I'd say this account will probably double by September, somewhere around there. That's where the challenge account is. I do know I have to, what do you call it? Update the damn journal, which I will do by the end of this week. So I do need that bullish pick. I know.
DHR, take a look at that one. That one, it's poking through.
DHR. Wow, that's nice. DHR is a nice pick. Let me just see here, make sure that I don't have any. Is there any trend lines on this thing? It broke through the trend line, didn't it? Okay, a nice trend line break. A little low on volume, but I do like these trend line breaks here. Far away from earnings, health. DHR is a nice pick. Really nice.
A little choppy, so
A little
you can
bit.
expect some volatility in it.
Biotech, and it does have a little bit. I mean, if I draw a line here from the 618 and connect it, it's got a little bit of that resistance there. Nice. At the end of the day, there's a lot of good picks, and there's some good picks here in the in the chat as well. FDX certainly a good pick, and NE certainly a good pick. You know what? I'm going to bite the bullet. I will take Tesla long as my pick. I'll just go. I'll just do it. I'll try. I'll ignore my bias against the company and just go with what I see on the chart, which is what we're told, which we tell everyone to do. So practicing what we preach here. And if I were to play Tesla long, I would probably look to play the call debit spread here, the 230 calls, the 235, maybe actually 230, 250 calls, buy those, and then sell the 237.50 calls. You do that for around $1.95. You do around 10 of those, and if it finishes over 237.5, obviously you're looking at around $3,000, and if you miss it, you're risking $1,900. So I'll take that here. I'm going to confirm this, put it in at 197 and see, and I got it. Okay, so I just did a call debit spread on Tesla, long Tesla. Ooh, I just hate saying that. Call debit spread 232.5, 237.50 for $1.97. I did 10 contracts in the challenge account, and that is my pick of the week.
All right, and in the chat room today, I posted an entry on Merck buying the August 16 115 puts for $2.20. They're currently $3 by 310, so that trade is working out nicely. Since the start of this presentation, I came out with it very early. You can see the stock has continued to drift lower. So that is my pick of the day, and I'll put that long in there. I like Will's pick. This thing is a beautiful, steady grinder. HWM, as in Mary, is the symbol. I like that. I think it's going to continue to push higher. Yes, we typically want to wait after earnings to see if these gains hold, but the price action that I'm seeing right now gives you a pretty good feeling that over the course of the next day or two, this stock is going to continue to move higher. Option liquidity not great. Trade the stock.
Before we close here, just a couple of quick questions here. What do I think of GCT? I don't think of GCT at all. It's between two SMAs. It looks like crap. It has a small ATR. This is not a stock that you want to be going long or short right now. ERJ, again, you got something with these low volume stocks. It looks fine on a bullish level here, but it has earnings next week. It is a choppy stock. Look at what it's done recently. It just bounced off the 50 SMA. With this type of volume and earnings next week, if you get trapped in it, you don't really have much flexibility. ONON. Looking at this, yeah, you have earnings on 8/13, so okay, it's far enough away. You do have a bounce off the 50 SMA. Out of all the ones that you just typed there, ONON is probably the one I would take. I wouldn't take a very big position on it. It just at 39.89 and entered the gap, and it does look fine. You'll probably make around 50-60 cents on a trade of that. And then someone asks, thanks for all you do. If you're interested in futures or any recommendation, yes, this is really big. It's a good book. It's a really big book. It's kind of thick. And what you need to do is open that book, put your face in it, and then smack both sides and hit yourself. That's the book I recommend on futures. You'll save yourself a lot of time and pain by doing that instead of actually playing futures.
You're so subtle.
I'm trying to be. You know, I try to soften my tone a little bit. I don't know if it's working.
All right. Well, I think we've gotten through all the questions. Harry and I need to have some lunch before the big news. So I think we're going to wrap up now. Look for an initial reaction, but then the press conference is going to produce another reaction. And here's kind of the deal with this FOMC. It's a little different because they go into recess. Okay, so this is the last time you're going to hear from them. I think Powell will probably be out in Jackson Hole in a few weeks, but the market tends to get a little bit nervous when they don't hear from the Fed a lot. So wait for the initial reaction, wait for the press conference. The D1 chart is what we're really paying attention to over the course of the next few days, probably the next week. Do we get the double top lower high, or do we easily run back up to the all-time high with nice, strong candles? We got to see strong candles. Then we got a chance to continue to move higher. Personally, I'm favoring the short side, but I won't be trading it until this upward sloping trend line is breached to the downside. So that's all I've got. Any closing comments?
No, you covered it well. Good luck, everyone. Just don't wait for the we always say, wait for the reaction on the FOMC. Usually, a lot of times that first reaction is not the ultimate reaction. So be very careful trading it. Wait till you settle in. Wait till you start seeing a very clear trend from the market before you jump in. Okay. And
Also, the
KB,
jobs report.
Pepsi, yeah, Pepsi looks fine, KB. You know, it's not a bad long. Just be careful there. You do have resistance at 174.50, and that is coming from a 624 trend line connecting over to 718. So wait, I would set 174.50. I'd set an alert. If it breaks that and confirms above it, then you're fine to go with Pepsi. All right, everyone. Thanks. Appreciate it. See you next
Trade
time.
well. I'll do a video Sunday, and we'll look for you a week from today. See you then. Thanks,
Sounds
Harry.
good.